So when looking at the Chinese electric vehicle company called NIO, they've been going through a lot of struggles lately, and when looking at their stock, it's been an absolute falling knife, crashing by unbelievable amounts so far in 2019. Yet in just the past month, the stock has been climbing by almost 40%. So what's going on with this stock? Why is it crashing? Why has it been soaring lately? And what does all of this mean for the future? Well, as a NIO shareholder myself, I've been getting a lot of comments and questions from you guys asking me to do an update video on NIO Stock. And just today, the company released updated figures for their second quarter deliveries. So in today's video, I want to share my opinion on all those different things and a lot more. I hope you guys enjoy this. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. Let's go ahead and start by pulling up the stock chart, and then we'll transition to all the different reasons why it's been crashing and why it's been going up as well, and we'll also go over the deliveries. Okay, so as you can see here, the stock has been absolutely obliterated over the past few months. It is currently down over 45% since their IPO. It is also down over 42% in 2019 alone, and it is down over 73% from their 52-week high, where they were trading in the $13 range, to now trading for just the $3 range. As I mentioned in previous videos, I did cash in some profits at over $10 a share, and I've mostly bought this stock at much lower prices, even in the $2 range, in an effort to lower my cost basis, but I'm still down around 10% at the moment, given that my average cost is still in the low $4 range. Most recently, I've decided to put a little bit of a freeze on any new purchases because it already makes up over 4% of my portfolio at this time, and I don't really want it to be a bigger position than that unless it just grows on its own. Although I have to admit that it's been tempting to buy a little more just to get my cost down to the $3 range, but I think I'm okay for now. In any case, the stock has been on an absolute tear lately, having climbed by over 15% in just the past week and over 38% in just the past month. This is likely due to a short squeeze in my opinion, as NIO is one of the most hated stocks in the market, but we'll talk about all the overall reasons why it's been climbing as well in just a second. First, I'll just give you a quick recap on why it's been crashing, and the first thing you have to understand is that this is absolutely more of a new speculative company than anything else, given that they are still very far from being profitable. In fact, they've been losing hundreds of millions of dollars every single quarter, although to be fair, they literally just started generating meaningful sales less than a year ago, so in my opinion, it's a little ridiculous to expect a brand new company to start generating profits right away in their first year, let alone when it's an automotive company trying to push electric vehicle sales that still make up practically nothing of the overall automobile market. And while China is a very high growth market for electric vehicles, the vast majority of them are small, cheap ones with little to no autonomous functionalities, which is the complete opposite of what NIO is trying to do in the premium EV market. Still, despite already generating revenue in the hundreds of millions of dollars, stock investors, traders, and especially short sellers have become very negative on the stock due to a large drop-off in sales and deliveries that they experienced last quarter. Sales fell by over 50% quarter over quarter, while deliveries also took a nasty hit, dropping by around 50% as well, after having come off of surging numbers in the two record-setting quarters prior. Now, to be clear, those are quarter over quarter numbers, which is a pretty bad metric in my opinion because the automotive sector is extremely seasonal, especially in China, where vehicle sales always surge at the end of the year before falling off a cliff at the start of the following year. So year-over-year numbers are much more appropriate to look at, but unfortunately NIO is such a new company that there are no real figures from a year ago that we can use, so quarter over quarter numbers is all that we really have at our disposal. Now, more recently than that, NIO had provided guidance for the second quarter, and that really scared investors as they were expected to sink even lower to about 3,000 deliveries at the midpoint of guidance, which would be yet another quarter over quarter decline, this time by about 25%. 50%. On top of that, they released a delivery update for the month of April, which is the first month of the second quarter, and the numbers looked pretty bad as they dropped a bit lower from March, and that news got even worse when they updated those deliveries again in May, and it was yet another drop lower in deliveries. Now, all the meanwhile, NIO had claimed that this was because of increased competition, as well as the automotive sector being very weak in China, which they claim saw vehicle sales drop by 15% year over year from the January to April time period. And the whole trade war with the United States has only added even more pressure to the Chinese economy that continues to have major macroeconomic problems of its own as their GDP annual growth rates continue to sink lower. On top of that, there was probably a large number of potential customers who wanted to wait until the newer, smaller, and cheaper SUV called the ES6 was released in late June before buying too many more NIOs. In fact, they had over 12,000 pre-orders for the ES6 just at that time. So not only was NIO stuck in a situation where the Chinese economy was struggling and the whole trade war was making things even worse, and the automotive sector was tanking by like 15% across the board, but you probably also had a situation where the ES6 was cannibalizing some of the sales of the older, more expensive ES8 SUV. And those are all some very real concerns. So why has the stock actually been going up? Well, in my opinion, it probably sunk too far down to begin with. It was probably oversold, so a little bit of a recovery was kind of to be expected. But this was a really big recovery, so there definitely has to be some other reasons. So let's go ahead and transition now to what those reasons are for the stock surging by such a high amount. Okay, well, for starters, Tesla recently released their delivery numbers for the second quarter, and you might remember how they were literally going through a very similar situation to NIO in terms of their delivery pattern, since they saw their delivery skyrocket at the end of last year before falling off a cliff themselves. However, their delivery numbers for the second quarter were not only a major recovery, but they were actually record-breaking as they delivered the most vehicles out of any other quarter in history. Of course, that didn't mean that NIO would magically pump out record deliveries as well, but it did mean that maybe NIO's numbers could surprise analysts a little and possibly deliver higher than expectations. This started to pump new investor money into the stock, and short sellers likely got scared into covering their positions as a result, which probably lifted the stock even more. Well, fast forward to today, and NIO has released their delivery numbers for the full second quarter, and they did in fact beat expectations by a substantial amount, which initially sent the stock soaring even higher in the morning, but then it eventually did come right back down and actually ended the day in red, surprisingly, which is probably because of traders probably cashing in on the stock kind of climbing earlier in the day, so it's probably shaking off some weak hands. But in any case, they reported 3,553 deliveries, which was higher than the 2,800 to 3,200 that was expected. From the midpoint of that, they beat by over 18%, so it was definitely good news. And throwing these numbers up on our charts, we can see that it was still a drop of about 11% quarter over quarter, but that's much better than the 25% drop that was expected. And looking at the numbers separated by months, we can see that June is still only the third best month in deliveries for the year, but it was at least an improvement of about 19% from April and 23% from May. Also, it may be important to consider those 12,000 pre-orders for the ES6, as they only delivered about 400 of them in the second quarter. So if you couple the remaining ES6 pre-orders with the seasonally stronger second half of the automotive sector, then you could potentially have a nice recovery in vehicle deliveries at the end of the year. So all of this has probably been lifting the stock even higher. Keep in mind that there are also many other growth drivers in the Chinese EV market, given that it's growing twice as fast as the United States. It's currently the largest EV market in the world, and it does over 55% of all EV sales in the entire world. So that's a huge market. Yet if you compare it to all automotive sales in China, which were 28 million units last year versus EV units were only 1 million, that would only make up about 3 to 4% of that total market. So there's still enormous room to keep growing in the future. In fact, Statista estimates that those million unit sales in China will increase by almost 5 times the amount by 2025, and a rising tide is likely to lift all boats. But speaking of all the boats, one of the reasons why I still refuse to invest heavily in NIO is because China is definitely flooded with competition. As of March, there were close to 500 different electric vehicle manufacturers in the single country alone. Again, the vast majority of those sell small EVs with little range and practically no autonomous features, and even the premium competitors are still in the early startup stages of their kind of business with very little financial backing, and most analysts predict that nearly all of them will go out of business within the next few years, similar to what happened with the dot-com bubble, but NIO may be an exception for a couple of important reasons. For one, they're backed by huge companies like Tencent and Baillie Gifford, with Tencent being the second largest investor in NIO after the CEO at around 13% following the IPO, with Baillie Gifford in third place at about 11% stake in the company, and they are also the second largest investor of Tesla, only behind Elon Musk. On top of that, NIO may still be considered a sort of EV startup, as they're barely now about to record a full year of meaningful sales, but they're still delivering thousands of vehicles a quarter that are already on the road, and they're generating revenue in the hundreds of millions of dollars, with their vehicles offering similar technologies, performance, and range to what Tesla currently offers at very competitive prices. Still, the stock is trading for around 4 times sales, so it's definitely not cheap. Granted, it has been much more expensive just a few months ago, and there is huge growth potential in the future that could make the current valuation completely irrelevant, but you still have to consider the risk that you're taking. So that's what it ultimately comes down to, right? How much risk are you willing to take with this company? Which, by the way, this is a company that can very well go out of business because they are losing a lot of money every quarter, and there is a lot of heavy competition that also has a lot of financial backing as well. You think of like some companies like BYD, which I believe Warren Buffett is invested in, but you also have companies like Geely and SAIC and BAIC. I think that's a huge one as well, and there's several others also, and those are all very serious threats to not only NIO but also Tesla. Don't forget about Tesla. They're also building the Shanghai factory out there in China, and that'll probably be operational sometime later this year. So that's a huge threat as well. For me personally, the risk that I'm willing to take with this stock only goes up to around 4 to 5% of my portfolio. And from there, I kind of just stop buying and I let it grow naturally. Now, again, that's not to say that I would sell out of my position if it goes higher than that. If it grows organically, just kind of on its own without me putting any money into it just because the share price goes up, then I'm totally fine just holding that position and letting it get bigger over time. In fact, a lot of people always leave me comments asking me, hey, did you sell NIO stock? Are you buying more? Are you selling? Are you, what are you doing with the stock? And my answer is pretty much always the same. I don't consider this stock to be an investment because it's not a profitable company. So I still consider it speculative, but I consider it a long-term spec play. And that's because I'm a long-term investor. So I'm always thinking long-term. So when looking at NIO, it's kind of a risk reward play where I want some exposure to the company because it's a kind of an exciting company. I want some exposure to the Chinese EV market. I get that through NIO. I'm also invested in Tesla. And so for me, it's really a long-term hold. Like no matter what happens, it could drop 30% tomorrow, it could climb 40% tomorrow. It doesn't really matter to me. It's a very long-term play. I probably won't be making any changes to my position for many, many years, maybe even like a decade or even longer, unless something happens where I really need to readjust everything. And the reason why is because I'm completely comfortable with my average cost basis that I have on the stock right now. I feel like I have a good cost basis on it that I'm happy with, and I have a good amount of shares where I have enough exposure to the company and to the market, and I just don't really feel like I need any more. There's plenty of really good stocks out there. I don't need to go all in on a stock like NIO. I understand why some people like to do more speculative plays and take higher risk because they want higher reward, but that's just not really my style. I'm kind of more of a medium risk, kind of medium reward. So it makes up enough of my portfolio. I only allocate about 10% of my portfolio to speculative stocks, and then the rest are safer companies that, a lot of times they're still high growth companies as well. So anyway, I don't want to ramble on too much, but What I'm trying to say is that I'm really comfortable and happy with my overall portfolio. And if a stock like NIO or a company like NIO was to go bankrupt, it really wouldn't affect me at all because it's such a small position. But at the same time, if it climbs in the future, I could definitely reap some rewards from that. So that's just kind of how I see NIO. I'm really comfortable with what I have, and not really planning on making any changes anytime soon. But anyway, I think that just about does it for this video. Don't forget that they will be releasing earnings sometime soon, probably within the next month or so. And if you guys want me to do a video when they release earnings and you want me to break everything down, I'd be more than happy to do that for you guys. Just let me know in the comment section or by hitting the like button, which also just helps my channel as well. So please consider hitting the like button, and share your thoughts and leave your comments down below. I'd love to read them and respond to them. And I'll catch you guys in the next one. Thank you for watching. I'll see you later. Bye-bye.